Good morning, traders. Today is Thursday, May 11th. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys. We are getting the release of initial jobless claims in the United States slightly weaker than expected, or slightly lower than expected, 236,000. We were looking for 245, so slightly beating expectations. April producer prices also rise by 0.5%. The estimate was 0.2, so a slight beat on that front as well. Good to be with you guys here this morning, fueling a little bit more upstoke here in some of the dollar rally that we've been seeing. Obviously, we cleared resistance yesterday on a closed basis on the index at 99.53. Keeps the immediate focus higher, and we'll take a look at some of those levels in just a moment. So, lots to cover today. Great to be with you guys this morning. We obviously had the RBNZ last night. We got the BOE this morning, both with different commentary and both producing the same result, interestingly, in their respective currencies. As you can see right here, performance on the session, New Zealand dollar, worst performer, down 1.38% as we open up U.S. trade. Looking at the British pound, second worst performer, down 0.58%. Both highlighted setups from last night, right in line, okay? Kiwi still holding near-term support, so I wouldn't want to get too crazy on that. And British pound also approaching near-term areas of support we'll go over in just a moment. So on the menu for today, obviously we'll go over the dollar index, the Aussie dollar, the Euro dollar, Euro Aussie, Euro Kiwi, and Kiwi dollar, all from last night. We'll take a look at the dollar CAD from yesterday, that really near-term setup, guys, that we were drilling down to all week long. We broke to the upside and validated it, moved back down, still looks pretty good. We'll go over that setup as well. Kiwi yen and British pound. I'm sorry, guys, I'm looking at the wrong lists. Take that all back. Here's the list for today, guys. Kiwi dollar and British pound, first two. We're going to go over those, okay? Then we'll hit up pound Aussie. Sandy, that's for you. I drilled down into it if you're in the room. Pound Kiwi, and then we'll go over the previous session, which was Aussie dollar, Euro Aussie, and dollar CAD. The Euro dollar and dollar yen we'll cover. I do want to go back and just take a look at dollar peso. I've been trying to get it in the webinars here, and I keep running out of time. I put this on Daily FX yesterday, so if you got a chance to see that, we'll take a look at the peso as well. Interesting pair with a really nice range that we're making right now. Okay, so that's the legit list. You're making the day sound exciting. I like it, says Kelly. Cheers. Well, it's always the last webinar of the week, so I want to make sure I get through all the setups that we've been covering, Kelly. Pooja says dollar CAD round trip from 36.49 last week. Yep. We'll definitely take a look at that as well. Okay, anything else you guys want to cover? Feel free. I know I'm going at a little brisk pace here, but we got a lot to cover before we close it out. So first things first, here's what the dollar index looks like. I do want to highlight that the best performer is the yen, interestingly enough, 0.37% to the upside. Yen strength, taking dollar yen kind of a little bit lower before hitting resistance. So I don't really know what to do with the yen crosses. In fact, the yen in and of itself has been doing kind of its own thing. So be cautious on the yen crosses for now. Dollar index looks like this. So this is the setup that we've been tracking, obviously. Again, I don't want to bore you with all the details, but we broke back above that trendline support. This was really the focal resistance range that we were looking for heading into the start of the week. 99.53 represented the January high day close from last year. Okay, really nice pivots in price. And it was also former trendline support and would necessitate a pop back above the 200-day moving average, which has been a pretty decent pivot. So we broke back above that. We broke back above the median line. Things kept constructive above 99.53. At this point, you still have to leave the possibility for a run towards 100. One spot 25 is my bearish invalidation. So even if this chops sideways for a little bit, next week makes one last push, as long as we stay broadly below this key 618, median line resistance, I'm going to continue to favor the broader picture here that dollar is still correcting. With the same respect, bearish invalidation. That's when we know that things are in fact turning for the broader picture. But with the divergence that you saw into the lows, the trigger break in momentum, you got to give this thing a little bit more room. Now on the immediate term, you still have tomorrow CPI data, University of Michigan surveys, you have that the release of, what else is tomorrow? Retail sales data, right? So you still have all those prints on tap tomorrow that could drive dollar price action. Here's what the intraday price looks like on that. So the near-term slope, a little bit more clarity on the 4-hour chart, does show that break that we were highlighting. We came back into it yesterday. We were talking about it during the webinar. I was checking it as support, and it held. Okay, so into U.S. session, continued to hold support. Immediately, you have the 50 line here, which comes up just ahead, right around 99.92. And then again, that 100 spot, 02, is going to be that 2015 high day close that we looked at on the daily chart. And if you look intraday, you can even see a little bit more clarity on the pivot picture there. Support, resistance, little play, support, support, instant resistance. That comes up right at the 100 mark. Long story short, I'm still looking for near-term exhaustion on this immediate rally, okay? Questions on the dollar index before we move off. Again, typically you're looking at the inverse of euro. So inherently, we should probably be looking a little bit lower in the euro. Now, euro came off of a big level though, so I don't necessarily want to take that stance, okay? And that's why I'm looking for a little bit more of a conviction sort of exhaustion play here. I'll be looking for momentum to start getting a little tired as we get into these levels. Here's what the 120-minute looks like. Okay, not very convincing also on the momentum standpoint. Here's what the 60-minute looks like. Again, keep in mind we just got that really strong print on PPI as well as a pretty decent read on initial jobless claims, so you're getting a little bit of a pop here. But I'm not going to be looking to chase this rally any further if I'm not already long. Also keep in mind, if this is an initial weekly opening range break, if this is the initial weekly opening range break, let's say this is your initial weekly opening range, we sat into it all the way into Thursday, you should be looking for that late week high. So again, heading into today, heading to tomorrow, maybe one last spike on a decent read in tomorrow's data might be what this thing needs before it starts to show us a little bit more of a recovery to the downside. Okay, moving right along. That is the DXY, number one. Number two, let's just jump right into the price action that of pertinence with the interest rate decisions that we got. Here's what the RBNZ did to Kiwi dollar. And I wanted to leave the slope that we added in the webinar yesterday because, again, I got a lot of good feedback from you guys that continues to help. And, let's just drill down to what we were talking about. Here's what the 60-minute looked like. Here's what the 30-minute looked like. It looked like a really nice slope. If you guys remember, we added this onto the webinar where we were doing some drills yesterday, just off the lows, right? Boom, boom, boom with that pitch. You saw the median line catch the highs. You saw the lower parallel catch the lows, which was already highlighted. And that's why these drills help, guys, because essentially we came into the week. Here's what the setup looked like from last night. But if you start off the week, you go just through past setups. Okay, even from like the Sunday update, we came into the week looking for a break of this key range. So price action starts to set up. You get an inside low, and the markets are really starting to reinforce that range. Once you get structure to it, all this does is help you identify the break out or the breakdown of the range more readily. It makes it more readily identifiable. So if we go back again to the setup from last night, you can see that the pitchfork that we had added in the webinar now converged on the weekly open. And that gave us conviction, okay, so when this breaks here at the weekly open, you're probably looking lower. Now, again, guys, you're not going to be able to chase this, okay? If you weren't already short on this trigger here, you had a divergence into the highs with a really nice momentum trigger, then this was probably really hard to get into. But point being, the conviction that you're seeing in price action gives you that directional bias. And that's what matters. Now we're looking for opportunities within that direction. So a break of the objective weekly opening range keeps the focus lower while below 68.85. As I noted last night, my immediate bearish invalidation, what would make me bullish, it'd have to be a break back above the weekly open. So as long as we stay below that, the pressure is to the downside on a break of this formation, near-term formation. Okay? So what I wanted to highlight is that while that is the case, and what I said last night is that the break to the downside shifts the focus, you're still at key support. So yeah, we're bearish, but the downtrend is at support, and that's more easily highlighted here on the daily chart. And here's what the daily chart looked like last night. Okay, this region right here, 2016 open, 168.28. We were trading literally right there. Okay, and you have the 2015 trendline support, which comes up all the way off those lows and converges right on that region. Okay, you can see it a little bit clearer here on the live chart. Boom, boom, right there. So, well, what the hell does that mean, Mike? What do we do from here? You sit on your hands. If you're short, I still think you hold that stop against 68.85. Okay. If you're looking for new opportunities, you're looking for a rebound to get back in on the short side. Other than that, there's really no play on this. It's a downtrend at support and at larger uptrend support. So it's really kind of a critical juncture here for Kiwi dollar. If we close today below 68.27, I'm going to continue to favor the downside, looking for that a little tag, maybe a soft target here at the median line that's 67.80. Okay, it's like a 40 pip drop. More importantly, the 100%, which would be 2 equal legs off the 216 high, takes it down to 67.50. That's a big zone right there. The key 618 of the entire rally is all the way down here at 67.13. That converges on slope here. Okay, also heading into the start of next week. So a lot hangs, in my humble opinion, okay, on this region right here. And if we do push below it on a closed basis, I would expect this thing to be a little bit more of an acceleration drop. That said, momentum ain't all that convincing to me at this point. And that's why, for me, I'm a little bit more reserved. Okay, from the RBNZ guys, listen, they came out with a little bit more of a dovish tone, saying that they may need to soften things even more so, and that really prompted a strong drop here in the Kiwi. So, irrespective, our favorite downside move, our bearish invalidation level held, and everything went as planned. And this is why we stick to the technicals, guys. We started off the week with our bearish invalidation right here at 69.70. We got as high as 69.50 before turning over, and here's the break. Stick to the game plan, stick to the levels, and the market will do the rest. All this chatter and nonsense, we just need to know when these events are happening. You know, again, markets speak in price. Hi, Michael. Aussie dollar, sterling dollar, and related pairs do exactly you analyze. Sandy, it's not, they're doing what I'm saying. I'm just interpreting what the market's giving me. Don't give me the credit. I'm just trying to identify it. But it's been working out well, right? So watch 68.28 here as support for Kiwi. That's the level to break. Again, like I said, on the near-term charts here, if you do see a downside move, 67.80s would be a nice confluence. By the way, this is just basic trendline resistance here in this dashed red line. But you can see it's a ridiculous pivot. Boom, 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 break, support. That converges right around 67.80. And then again, that 100% extension. Near term, I do think you can see a little bit of a bounce here. But below the weekly open, I'd still be mindful of the downside. Okay, that is Kiwi dollar. Any questions? Going once, going twice. Sold to the final bidder. Number 3 will be sterling. BOE comes out this morning with an interesting tone. The MPC did hold interest rates as expected, no change there. But we're a little bit more hawkish, in my humble opinion. Again, you know, they did lower the growth forecast for 2017, but they increased their 2018-2019 growth forecast. Inflation a little bit softer now, but running over the 2% target in the longer run. And saying that they may need to actually increase interest rates more so than the markets are currently pricing in. Now, the caveat in all of this, and one of the reasons I personally think the market's turned over, besides the fact that we were bearish anyway, is the fact that everything that the BOE noted today was under the assumption that the Brexit happens in an orderly form. And when they say that, guys, basically what they're saying is that after the 2-year period is over, are the negotiations in a unilateral fashion already in place? as the Brexit kind of process completes, or after the 2-year process, are they still in the process of negotiating these unilateral agreements? And that's kind of the caveat. All of these forecasts are on the premise that it's going to be a smooth transition. So whether the markets are kind of doubting that, or whether the markets are kind of saying, you know, they're calling BS on that, whatever, the technical picture for us was looking for the pullback early in the week. Now, the support structure that we were looking for is being tested as we speak, and that is 128.27 into 128.54, a region that we've been highlighting for a while. It was resistance last week. We broke through, was instant support late in the week right here, back on the 4th, and here we are yet again. So for me, taking it back to the daily chart, and here's the update from last night. For me, this is kind of the stage 1, okay? If we break sub 28.28 on a closed basis, I do think sterling corrects deeper. That's not my base case scenario as of now. I am looking for some exhaustion on this move. I like the long side of the pound, but there's been a lot of things we've been talking about over the last couple of days that has me a little concerned in trying to fade this just yet. I need to see price action start to turn more aggressively, and here's why. Divergence on the daily chart is something you want to be mindful of, obviously in a timing facet because it could last for days, but that's a pretty decent divergence signal right there. And as I always tell you guys, the more subtle it is, you know, when it's standing out and everyone's staring at it, it's kind of like when it doesn't play out the best. But a subtle high and a much more sterner low, okay, one of the reference points above 71 below, that's typically, you know, it's typically a strong exhaustion signal. The one thing that you always want to note about divergence, it doesn't tell you anything about the magnitude of the pullback. So this could be it. I don't know. But all I know is that you're coming into initial support. The other thing is that you have a clear-cut trigger, and these are something that we always talk about. I don't draw them here as often anymore, guys, because I tend not to want you guys to put too much emphasis on these. These are just visual kind of cues that we can use to help us identify you know, a shift in momentum. So it looks like we're making a break of a near-term support trigger in momentum as well. Remember, this means absolutely nothing until the close of today's session, because all the RSI indicators or any oscillator you look at doesn't peg until the close of that candle. So if we close below it today and we're able to close below 28.28, that in my mind would suggest that we're in a bit of a pickle here. Also keep in mind, my friends, that 128.28 is the objective monthly opening range low, and today's the 11th. So objectively, if we break this, it would suggest we're on a corrective course for pound. Again, not the base case scenario, but we have to be aware of it. You know, last month's opening range break was beautiful. That didn't happen until the 17th, and you saw the result there. You know, the other month, heading into March, the opening range was also right around the 17th. That pushed into a high right into the close of the month. So trust our strategy, okay? Same thing on January's opening range. That broke on the 20th, really late, but it pushed right into a high, right into the close of the month. So on whole, watch 128.28 as support. I would be mindful of any short exposure while you're above this. The weekly opening range, the monthly opening range remains intact. Taking a look at the intraday picture, slope is so beautiful on this, so you know where to go. Again, if this holds, I'm looking for exhaustion. Momentum is at support, and we see that rebound. It's really going to be the break back above the monthly and weekly opens that gives this thing the pop. So you're looking at 129.50 and 129.80. Mark those down. A break above 129.80 and you're back on course. You're looking for 130.56 and you're looking for 131.21, and that's a big region too, that 38.2. Okay, that extends off the highs from the year, January and February. So super clean levels on the pound. It's China like. It's just, we just got to get this thing moving. And as I said yesterday, hopefully the BOE wakes it up, and it has, right? We got a nice drop. We're back at support, 128.27. Watch that heading into the U.S. Open. Don't be mindful of any short exposure while above that region. And again, we'll be looking to see if we can find any type of exhaustion play. While we're speaking here, let me just drill down real quick. Here's the 60-minute looks like. Nothing there yet. Here's the 30. Okay, 30 looks like it's starting to recover right back above the 30 oversold level. Here's the last time we saw a dip into 30 oversold. It was actually into this same price range. Here's the last time we saw a dip into oversold, a little bit higher. Okay, and let's go into the 15-minute. Looks like a bigger recovery there. Okay, so the way you want to play these guys is at 10-minute. I'm literally just drilling it down with you guys. The way you want to play this is you want to look for the US session to do one of two things. Okay, here's the 10-minute again. You want to look for the US session to make another low and fail, make another low and fail ahead of 128.27. Or if we rally into the US session, then we pull back, we want this attempt to low to fail below this. And that way you can put a conviction stop on a breakout of that high, and then you look to play the recovery. And that's how we look to play these counter trend moves. Broadly speaking, you need to break, like I said, the monthly open, the weekly opens to get this thing on a more conviction bounce off support, essentially. It would be kind of a done deal to look for continuation of the broader uptrend. All right, but the preface, the focus, everything for me today is on this key zone of support in pound moving into the US Open. Any questions? Clean cut, no changes. All pound levels remain unchanged from last night. Okay, moving right along. Sterling Oz. Sandy, I see you in the room. This was for you. Like I said, here's what Sterling Oz looks like. Just moving along with the crosses for the Sterling. Here's what the Sterling Oz looks like, if I can find it. Okay, and here's what Sterling Oz looked like last night. So we actually put this together a while ago. If you guys look, the last update was back on the 19th of last month, and it's the same slope. Today, or yesterday in the webinar, we discussed this median line parallel that we extended off the highs from February, literally caught the highs that we made just over the last couple of days. And we talked about the risk of this materializing into a larger correction to the downside, noting support at the 74 handle. So we're basically doing that now. Okay, we're pretty darn close. I think the low, I was looking at this morning, it was 74.33, okay? We noted 74.08. So I think you might have a little bit more to go to the downside. You have the 50 line there, the current operative slope. You have the 100 off the low. As we said, we soared through the 100 on the way up, but you know the structure of this extension, that 618, was perfect support after we broke through it. So I'm going to look for that same type of phenomena to happen again. If we pull back specifically because it converges on that median line right now. So, you know, the risk materialized. Okay, here's what the 4-hour chart looked like last night. Again, we were pressing into that resistance. We were making some divergence. We noted downside risk. 73.64, excuse me, was sort of the first initial region. You'd look for on a little bit more of a concerted break to the downside. That's a little bit lower on the slopes. Here's what it looks like here. All right, so 74 is the upper side of that region right there. That 618 on the daily. Just a little bit lower, 73.64, former swing highs. So sort of this gap zone right here is what I'm looking for as near-term support. So I think you got a little bit more to go. And not only that, Sandy, this move right here breaks below the weekly opening range. So essentially, you know, objectively, essentially, irrespective rather of what Mike Boutros has to say, that's just right there. I'm pointing at it with my finger. I should use my mouse. This right here is just a break of the weekly opening range low. Now we haven't gotten too much of a candle close below it yet, but you get the picture. Now, I'm mindful of this and Sterling Key. We were talking about both of those this week just because I don't want to get too bullish Aussie, which is what you're doing here in the pullback for pound. I think if you do see any further declines, it's largely should be driven by pound losses. So you know, in the near term, I don't want to necessarily be too constructive on the Aus. The Aus, I do think, could make a little bit of a bounce. We're sitting at that 100% extension that we talked about Tuesday still, or was that Monday? Or is that Wednesday rather? Either way, it's the same level, 73.35, and we'll come back to Aussie in a moment. So, you know, Aussie could see some upside, which is why I do think pound Aus could see some downside, but I don't want to get too aggressive on it. Largely speaking, This is a pretty impressive upslope we've been working with off the lows. You know, you'd be looking for one of these levels to offer you a little bit better of a rebound to the upside again. Any questions on pound Oz? The only other thing I didn't mention is 72.57, guys, is going to be our bullish invalidation. Okay, and the reason for that is very, very clear. You have the 1618 extension from the lows. That's not really the major deal. It's really going to be the monthly open, okay, which converges on the near term on this slope. Okay, that's right here where this red line is. And then on the daily chart, if we go back, basic slope support off the lows, extend that to the high that we made back in December of last year. You can see that it caught the high that we made here early in the month, or late last month, early this month. That converges on the monthly open at that same level. Okay, 72.70, 72.58 right here. Questions on pound Oz? That's number 4. Moving right along, just a quick touch on pound Kiwi. Again, like I said, I'm not really a big fan of either of these right now, but I did want to go over this because we talked about it yesterday in the update. And here's what I just wanted to highlight. It actually turned out being a phenomenal play, guys. I just didn't have personally the guts to do it. If you did at home, I commend you. Sometimes you doubt your own analysis, which is stupid, but you know, I just didn't have the guts to do it. Look, 89.20 into 189, yeah, 189.29 or 189.21 into 190.50. It's a massive range. I understand that, but it's pound Kiwi. It's got a pretty big ATR, and that was a basic, huge resistance range. It was the 1618 extension from the entire advance off the lows from last year. It was the swing highs they made of July of last year on that massive rebound. We haven't seen that level since. And just above that, you have the operative, you know, median line structure that we've been following off of last year's low. So I personally thought the stretch, and going into the BOE is why I was shook, you know, I thought the stretch could take us that high first. But I've been looking for some exhaustion, and that's for a couple of reasons. You saw momentum pop above 70 and close below. And then price action made a new high, and you couldn't even get back above 70 again. So this thing was looking tired either way you look at it. But again, to try to like fade or rally like that is very difficult. So like I said, if you had the guts to do it, great. If not, no worries. I think we'll get another play on this. This was a big, big resistance zone. We've pulled back considerably already. We're at 188, so we're a little over 100 pips off the high already, over 120 pips off the high. Here's what the intraday chart looks like, just to show you a little bit of a picture. Okay, obviously you got the pop there on RBNZ, and then the rejection on the BOE. So it was a nice sort of CB play today, central bank play, on both sides of the market. This is also, you have to keep in mind, the weekly open and the monthly open. This is a marker from last month. Here's your open actually for this week. So, you know, from a trading standpoint, now you're marking even more divergence into this high, and I still think you want to be mindful. Ultimately, guys, we definitely want to be long this pair. I'm very constructive pound Kiwi in general. Taking a look at the daily chart to zoom out, we broke out of a multi-year trendline channel, descending channel formation. Very clean, mind you. Okay, it's only two-point touch here, but the pivot and the parallels have been phenomenal. The lows for 2016 were right on point. The break here suggests we got some upside to go. Okay, we've already made it through a basic 236 retracement of the entire decline. The next just basic fib isn't all the way up until like one, isn't all the way basic until 2. But you have a little bit of a couple stacked up levels to begin with. So the focus is on this still range. You could spill lower. I'm bullish above 183.50 and is a way away from where we are right now, but that's the bullish invalidation level. If we get a crack to the downside of the monthly opening range, you kind of have the play there to get back long. But at the end of the day, this is a big, big resistance zone. Okay, so be very mindful of that in pound key. And again, here's the intraday chart. If you guys want to take a snapshot of this, you can go ahead and do that. Okay, that's pound Kiwi, number 5. Any questions? All right, a little bit more into the juicy stuff. I know not all of you like to play these crosses, these extravagant crosses, because they're a little bit more richer, but here is the juicy stuff. Let's go into Aussie dollar. Who is involved in Aussie? Sandy's getting into this. Here's Karthik as well. Okay. Just going through your questions, guys, and Trevor. A lot of you are looking at Aussie, right? Okay, so here's what Aussie's doing, guys. Let's go back to the daily chart, and let's go back to the latest update that we put on SB, which was on the 9th here. So here's what Aussie was looking like as we were sitting. This was on the, again, this was on the 9th. So this was Tuesday. We were looking at 73.35 as key support. And I said, look, we came into the week citing downside bias sub 74.40. It broke. We took out 73.67. We took out 73.40, and that's support. And a big support zone just because of the significance of the Fibonacci level. And on the daily chart, there is slope there. It's not so clean on the intraday, but on a closed basis, we're basically right there. So the focal range still remains 73.35 into 73.85 is the initial zone of resistance, and that's what we've been doing since the break. Boom, 73.85, 73.35, 73.85 is still resistance. Okay, let me just bring this right here for you. And that's the focal break. If we break to the downside, you got nothing until 72.80. It's 50 pips to the downside. And that's just a Fibonacci confluence as well as the 2016 open. From a slope consideration, you've got tons of room, even down to like 72.30. But the question is, does this charge a near-term correction or not? You're seeing divergence into those lows from last week, price action making a lower low, the oscillator making a higher low. So I am, again, a little concerned about some sort of just reprieve, if you will, in the Aussie before continuation, and that's why for me, pound Aus could see a little more downside, right? A little more downside. That being said, there's not much to get bullish about here. It's just a bounce off support, which could go a little bit higher, but ultimately, sub 74.40, same game plan from the start of the week. I want to be bearish. Those are the lows from last month. It's the 618 extension off the high. See what near-term price action is doing. Yeah, I mean, it's just in a simple range right now. Even momentum maxes out at 70, 30, then it starts to contract like that as price action is doing. It's just setting up. You got a lot of event risk data tomorrow with CPI, retail sales, and University of Michigan confidence survey. I'd be looking for a break of this range. Honestly, if it breaks to the upside and clears yesterday's high, you're probably going to see that recovery to test those lows from last month. Okay, and that's where I'd start to look for resistance right around 74.40. Other than that, I mean, you're still looking for exhaustion plays on rallies into resistance. But you kind of know where the break point is for a little bit larger recovery in Aussie. Any questions on this? It's a tricky zone here, guys. It's same thing that we were talking about. It's a downtrend at support. So will that materialize into a larger recovery, or is this just the pause before the next leg lower? I would say you'd need to watch a break of 73.35, 73.85 to look for evidence of that. Broader picture, still bearish sub 74.40. It's number 6. Any questions on Aussie? Euro Aussie, number 7. Here's what Euro Aus looks like. Very, very similar play. Okay, Euro Aus from last night. Here was the daily chart. We were talking about the strong reversal. We highlighted this chart early in the week, and we were just adding this thing. You guys remember this? just adding this formation. And I was like, look, I don't know if this is the right formation. If you extend it off this low, it actually had a little bit bigger of a slope up here that left some room. I think we were on point because we got the pullback. And the major area of support that we're looking for is right into 147 initially, key support and bullish invalidation down at 146.07, 146.23. So we're not quite there yet, but certainly the pullback has materialized. We were at 148 back earlier in the week. We got as low as 147, but we didn't quite get into that key, confluence region. So I think you might get a little bit more of a steeper push, here to the downside for Euro Oz. But largely speaking, we're looking for exhaustion into one of these levels as possible level or a possible region of which you'd expect to see a larger rebound. So nice play here in Euro Oz. Again, if the Aussie shows us some strength, might be just the fuel you need to get that downside thrust into that support zone. That's kind of the game plan moving forward. Here's what Euro Aussie look like on the intraday charts. Again, just highlighting that 2016 open. Key resistance 49.14. Also had that slope that we had added. We tagged it last week. We're opening the weekly opening range just below. 147.67 was near-term support and the weekly opening range low. Once that gave out, really shifted the focus to the downside. Here's the intraday chart now. Okay, now what I wanted to do is this. We put this together here in the webinar yesterday. If you guys remember, we added this slope as this thing was coming into near-term support. That charged a great rally. If you guys were in the webinar yesterday, we probed below it very briefly into 147. Then we rallied right up into 148. You had a 100 pip rally to play with yesterday on that rebound in the webinar. So again, if we zoom this in, I guess it's clear. This is going to a 10-minute chart. And again, just to show you the hallmarks of the play, okay? Momentum coming into that pocket of support that we had noted. You saw a big bounce into the U.S. Open, 8:30. Markets are, again, 9:30 slot market opens. You're pushing the opening range low. You get some pop right back, you get some divergence on near-term price. Price actually makes a lower low. The oscillator makes a higher low. You got a little momentum break right there. You look to play a stop against the low. Once you break quarter, a third of the ATR, guys, is what I've been using lately. I know I usually preach talking about a quarter of the ATR as these 4 major trading ranges throughout the day, or 4 major trading markets throughout the day. You look to take about a quarter of it. But in a volatility market environment that we're in now, where you're seeing really contracting ATRs, you're seeing very, very low vols, implied volatility is ridiculously low. If I hear the word VIX one more time, I'm going to vomit, just because everyone's looking at the VIX. And guys, just to put on a side note, as traders, you could throw that VIX chart right out the window, okay? As an investor, a longer-term investor, sure, yeah, look at the volatility measures, whatever. But as a trader for us, especially on a weekly or intraday, the VIX will move with markets. It's not telling you what's going to happen. It's reactive. So yeah, the VIX is exceptionally low, but go back in history, guys. Periods of extremely low volatility are typically followed by surges in volatility. So what do? You sit on your hands and wait till the markets actually move to see the VIX move, then start getting involved? So my whole stress is just don't mind that, okay? Markets will pick up, volatility will pick up. We need to be well positioned and know what's going on and stop stressing that. I keep hearing about it on every single publication, how low it is. So I don't care. Large, to go back to my previous point, not to digress, is I've been taking a third of the daily average true range is typically my profit target. So if you're putting in 100 pips on a daily basis, look for about 33, 34. Usually do plus or minus 2 pips on each side as your profit target per scalp. Okay. Any questions on Euro Oz? So basically what I wanted to highlight with this is that this is the formation that we had added yesterday, right? And then the profit target would have been up at the upper parallel. I wouldn't have been playing the breakout. But we did break out, we pivoted back below, and now we're below this. Do I still want to stress this slope is what I wanted to talk to you guys about. There's a couple of things you could do. You could try to make it a modified slope and see if that catches anything. Modified slopes just simply angle the slope to the basic trendline resistance. of the gradient. So if that doesn't offer anything, just take it back to basics. It's not all about the pitchfork. It's about finding the gradient of the market. And we could be working with a basic bull flag or something like this. You can use that low. You can see that we're kind of probing it right now. I would personally stretch it to that low, okay, which converges on that slope that we were looking at anyway, brings up support or brings down support to here, okay, 46.70. And that's kind of the same zone that we're looking at right here on the daily. So kind of know where to look for. You kind of know what to look for in Euro Oz is where, you know, this and this, both areas of interest for possible exhaustion, long exposure. This is where done deal. You know, we break below 46 and this thing's probably going to tumble pretty hard. Not my base case scenario, not what I'm looking for, but this is ideal scenario in my humble opinion for this thing to show a little bit more of a rebound. Guys, don't forget the broader picture. Daily chart. Look at the slope off the 2015 December low. Boom, boom. It's right there. It's right there. So if it's just a pivot break, this should really be the sweet spot for the continuation in Euro Oz. My humble opinion. Any questions on Euro Oz? Number 7. Dollar CAD is up. Number 8. I see a lot of questions on Dollar CAD. Everyone in the room basically, right? Kelly, Karthik, Sandy, Pooja, all of you love Dollar CAD. So here's what's going on with Dollar CAD. I didn't think it was going to make the reversal quite this high. We're right back, like Pooja said, full round trip for the week. Right back up here. The monthly open held, the weekly open held. You know, this was what we were looking at in the webinar yesterday, and we were looking at this slope. We came into support. I thought this was going to break. Next downside target was 136. You guys remember, that was big. December highs, you got the 100% extension. It would have been nice. 2 equal legs down, but market had a different plan. The weekly opening range, monthly and weekly opens all stacked here, held like a charm, and here we are again. Failed at a break of the weekly opening range highs just now, and here we are pulling back. Guys, this is neutral at best right now. The broader picture, let me take you back to the daily chart. I don't want to digress or try to dodge what my personal opinion is right now. I still think it could rally into 38 and then we'll come right back. So the broader picture is completely unchanged. This is what we came into the week saying. This is the major resistance. You know, if it gets into 38.15, 38.30, an entry I would love, but it made an outside day reversal right off slope resistance. So I couldn't sit there and be stubborn and still say, no, I want 38, right? The market is saying something to me and I better listen. So all you've done is chop within the confines of that singular daily range. I don't think we can make any strong assumptions from here, guys. I think we need to wait for this singular candle range to close, what we did on the 5th, because it was a rejection of clear slope resistance at the highs of the year. And you know, it's just you have to clear that range for us to get the whole premise of the play was to play the pullback into 35.70, 35.60. That would be the first area of support you'd look for. Former highs from last year, 50% retracement, nice pivot. The 50 line of the current operative slope, yada yada. But the market again just continues to hold this key range. So look for exhaustion back near 38 again. You know, still need to see a break of the monthly open on a closed basis to get this thing going on a corrective path. Till that happens, play it as a range. Some of you are holding positions on this. So it hit the 236 and I took the short at 137.64. Okay. Look forward to a review on it for the community. So that's from, okay. So Kelly, who else had this? Oh, Pooja, are you in it? 136.50, or you're just naming that site? So and Sandy's out. So look, this is for Kelly. So Kelly, nice. You're still in the money on it, right? This is what I would say. Here's the intraday chart. The problem I'm seeing is that if we open up the U.S. market and you do start to make some candle closes above the, you know, basic objective weekly opening range, it's Thursday. So I think you might get that run into 38, and I don't know if you want to be in it. So let me just clean this up for you. You don't need this slope anymore. You don't need this slope anymore. You don't need this slope anymore. This retracement still active. 618 is not giving much help. That's that basic trendline resistance we added in the webinar. Remember, break, break, and this is another indication, another just tool, visual cue, if you will, that you want to use when you're trying to kind of ascertain reversals and rebounds. Resistance, resistance, break, saw acceleration. If the support holds, then you look for that break of the previous session highs, which is why I'm a little concerned that this thing could give you a little bit more upside. I don't know what your pain threshold is on that trade, but if you settle back above, again, my humble opinion, Kelly, I'd probably have a break-even stop on that by now. I still like the correction lower, but this is pretty definitive price action. And there's no, major key CAD data except for dollar data tomorrow. So if the dollar shows one more spike higher, one more push higher, you might get a better opportunity to sell. Honestly, you're short from like the best spot of the week, so I don't want to tell you to get out of that for no reason. But just know that if we do start to push a little bit more further through 37.60, it's likely to give you a little bit bigger of a push towards 38. Good stuff. Awesome, Kelly. He says, yeah, nice wick is developed on the candlestick. I closed with 42 pips in 20 minutes. That's how you play it, right? And that's why for me, the short term, we can always get back in, right? But we want to make sure that it's always about what our risk is on that trade. Pooja says, I'm still short, part booked at 136.55, stopped on break even since we began. Awesome. I'm out now, sidelines for now. Okay. Yeah, that's how I would do it. Guys, look, it's because in my mind, it's because of the rejection that we're seeing at the monthly and weekly opens, the launch, taking out a higher high. For me, the fact that we turned from big resistance, I'd want to see a little bit more conviction on this. I still do think it corrects lower, guys, but does it wash everyone out first? We'll see. So no clear structure to the near-term dollar CAD. We'll do another drill like that again once we do get a little bit more conviction on the high. If this were to break, and this is completely speculative, guys, but just a drill, if this were to break this low on a move lower here, the initial thing, by the way, you don't need this extension anymore. The initial thing I would be looking at would be this. Okay. And then you would also add a quick extension off that decline to give you the downside targets and see if there's any confluence regions. And if you do that, you see that the 618 was a very nice pivot here in price, resistance, break, support, break, resistance. That gives you 36.75. The 100% is what I'd be focused on. 2 equals down, give you 36.18. This is a huge assumption. Okay, I'm just saying this as a drill. I would need to see a further downside break before I can make an assumption that this is a concrete high or something that the market is actually going to use of significance. But if it were, markets are always, your trading strategy should always be a series of if-then statements. If this were to break, I think the levels are very, very exceptionally clean on what I would personally be looking at for downside targets in dollar CAD. Make sense? Any questions? In and out positive, my pal, just like a woman. Okay, Kelly, I'm not going to read the rest of that. Karthik says, typically I'm long on CAD from 135.42. I don't know what you mean by typically, Karthik. Is that something that you've been, oh, you're saying for the last 24 months. I mean, if you've been looking to play that range, it's, on a longer term stance, sure. Kelly also saying, great charting, love it. Thanks, pal. Hey, you're more than welcome, Kelly. Appreciate that. Steve says, since we're on dollar CAD, what about Euro CAD? It's funny you should mention that because I think, oh, I don't have Euro CAD on the list, but I can always add it. Let's take a quick look. Okay, I have us settling into near-term support right now. And that level is defined by a basic 236 advance off the low. Basically, it's the yearly retracement right here. You see that? We kind of came right into it yesterday and making a little bit of a pop from here. EuroCAD is another trade that I actually do. I've mixed feelings about. I like the long side, largely speaking, for sure. I think you have a little bit deeper of a correction risk in this pair before it corrects higher, but I'd largely want to stay constructive above 146.40, this region here. It's the high day close that we made back here on election day. So this is your bullish invalidation, key support. This is your top side target. It's just key 618 retracement of the entire decline off the highs. Okay, so Steve, take a snapshot of this. I'll jump into the intraday charts. I haven't looked at it recently, so I'll jump into the intraday charts in a moment. Also, the other key technical feature that you're working with on this year's advance is obviously the break of the 2015 December low trend line from back here. Support that was tagged 4 times, 5 times, tested as resistance, gapped above, in time. That still gives you pretty free reign to the upside while above 46.15. I'm talking longer term here, guys. These are daily charts, obviously, right? But it's always, the top-down approach is always how we'll approach it. So multi-time frame analysis, right? This is, kind of your ditch zone. Actually, let me just check something out real quick. Ooh. Well, that's interesting, isn't it? You get support, you get resistance, continuing to mirror that same slope off the lows. Okay. So that's the daily chart. The intraday chart, let's see what that looks like. Yeah, it's a chop fest. Yeah, I wouldn't personally want to touch this right now, to be honest with you, on a near-term basis, Stephen. Like I said, the broader picture for me would still be to fade strength while below 150, to look for a pullback into that former trendline support. Once we make another rebound, if you take an extension, look for a measured move to the downside, and that's where I'd look to base a stronger long position, looking for continuation. But I think the immediate risk is still for a little bit of a move lower here before you turn. So kind of a boom, boom type of deal, and then you look to base a little bit more of a stronger long position. Does that make sense? It's just I don't like this kind of decline, right? This kind of chop fest, typically in my humble experience, is going to chop me up. I know that for a fact. I want to see the advance have structure or the decline have structure, meaning I want to have a swing to the upside so I can add a pitch, I can add some slope. You can't even add a pitch or a slope here or anything. This is just going to be, way too sharp. These kinds of things never work, guys. They're just way too, the gradient is way too sharp and you'll start to get false breaks all the time, blah, blah. So let's see if this thing can give us a swing to the upside, some sort of structure to the decline. I do think you use that decline to get long, but that's sort of my vision right now for this one. Yes, thanks. So maybe down to 148.20 before higher. Yeah, I think 148.20 is actually a really nice zone, maybe even deeper, to be honest with you. But we already came into 148.28, which was the exact 236. Let me copy this here. There you go. So what I would be doing is I'd be looking for this rebound to give me another high, and then take the measured move of that and look for the new low to get long. And by that time, hopefully you'll also have some slope. So on the reversals from resistance, guys, we just need to get that retest, and that's how you play it. Just the initial pullback is not where you get in. We need to see kind of an attempted rally to get back into. I mean, guys, don't forget the 2016 Open, you don't need to wait for this high. The 2016 Open and the weekly Open comes in at 150.50, 150.20. So that's, you want to see it try to get back up there and fail before trying to play further downside. Make sense? Steve says, yes, thanks. All right. So running low on time, but I will push it today. What was that? Euro CAD. Okay. We got dollar CAD. We got Euro CAD. That was number 9. Euro dollar. Obviously, we can't move off before talking about that. Heading into tomorrow's U.S. event risk. Look, it's a slow melt lower. It's the same exact deal we were talking about with Euro CAD. I haven't been able to get on the short side, unfortunately, in this one either. I do think you look for 108.20. We talked about 108.20. Just ahead of that, guys, 108.30 is also a region you want to be looking at. This whole zone, 50% retracement of the entire decline from the election drop. You have the lows, okay, the post gap for the uncovered lows from last month. You have the 200-day moving average, okay, and you have the swing lows from way back here that you made in March of last year. So all of those line up in this key zone here for dollar. For euro dollar. Note also that on the 4-hour, it's been divergence all week long, right? This thing just holding the lows as price action continues to press lower. So again, another one where you want to be mindful about trying to chase the short side on this long. Largely speaking, I'm looking to get long on further weakness. Again, recognizing that we've broken out of a multi-year formation here in euro. But as far as euro dollar is concerned, no change to any of the levels that we were talking about earlier in the week. Oops, wrong update. Here it is. So here are those levels from earlier in the week, right? We were sitting here at support. This was key resistance. Obviously, we gapped right back below it, held below 109. It was basically 110, 109.90. There's the break. 108.72 got taken out. And here's 108.20. See if we can't get some support on a final drop into that zone. Euro Oz 147.20. Long from 147.20. Watch 147.67 to 147.80. Basically the former opening range lows. And again, what was that level? Oh yeah, that's just a clear pivot in price that we had highlighted weeks and weeks and weeks ago, years ago, I guess 2016. Look, so I'd be mindful of that as your immediate upside target on that play from last night. Awesome, Sandy. Well played. Well played. Any insight on gold today? I'm long from 12.15. Any areas of consideration on longer term? So Karthik, for gold, man, I'm not a, I don't know, I'm not a bull from these levels just yet. I don't know what your target is as far as an upside play. Let me take that back. Short term, I think you got something here. Longer term, 1208 is really the butter zone down here. That's the key 50% retracement of the entire advance from last December's rally. And also you have slope. Let me take that back. Near-term slope, we highlighted this yesterday, remember? We literally just came into it. So if you're long from right down here, you had a really nice entry. Anywhere south of 1215. Sounds like you're long from 1215, which would be awesome. So you'd want to kind of look for this near-term consolidation to pop. I wouldn't be targeting anything above 1228 yet. That's the weekly open. And you have to keep in consideration that there is a risk for another spill into that 50% retracement, which would converge on that same slope basically into the start of next week. Lots down here. Karthik, does that make sense? I'd be mindful of a possible drop into this zone. You're getting divergence all into that low. So if it's going to make a rebound this week, this would be a decent area to do it. But you kind of want to look for this consolidation break to give you a pop towards 1230 first. This is the zone that if it breaks, I think you get a larger recovery in gold. The weekly open, 38.2 here, a decent pivot. You got it. All right. Cheers on that. So we did euro was 10. We did gold. Okay, I'm not going to leave without doing dollar peso. Look at this. I just wanted to show you this, guys. I don't really trade dollar peso too often. I know there's a lot of you do, and there's a lot of interest in it. Here's what dollar peso looks like, and I just wanted to highlight this because it's so ridiculously clean. I know Jamie's probably showed this to you as well. A basic trendline support off the 2000 May lows, April lows, okay, 2015. You tagged it 3 times that year, and then again you did it in 2016. Again, you did it in November of last year. You broke it, okay, in March. You tested it as resistance, and you're testing it as resistance there. Now, they're not the cleanest tests of resistance, but if you take the slope that we were working with from last year's and this year's high, which we were working with for a while till we broke down, guess what? The underbelly of that lower median line parallel is now resistance. Add to that the same slope extended off that high pre-election high, caught these lows. We talked about that yesterday. Basic trendline support off the lows of this year is what we're testing now. So it's just like the contractionary range is getting ridiculously clear. 19, let's just call it 300, okay? 19,300 is resistance. Support, I'm going to call it at the monthly open right here, 1878.40, 1878.45. That would necessitate a break of this near-term trend line and would break the monthly open, shifting the focus back to the downside. If this break of this long-term trend line is legit, this should be preserved. With the same respect, it's clear and definitive bearish invalidation, meaning if we break through this free reign right up into this key zone, 200-day moving average, 618 retracement, 100% extension, all lined up, 19,560 into 19,660, 100 pip. So watch for a break of that range. Not something I'm necessarily actively trading on a day-to-day basis, but I think once you do get that clear-cut break, guys, it's going to be pretty definitive. Momentum, obviously, kind of maxed out here right at 60, so not really much of a signature that we're going to get anything crazy to the upside. But the levels just are super duper clean. So I just wanted to highlight those. Here's what the near-term targets do look like on a break of near-term support. Here's your weekly open, near-term support, 1889.30. We're right there right now. Trendline support off the lows. So very clear-cut and well-defined weekly opening range. If we do see the downside break, monthly open, 1878.75. 764 retracement, converges on last week's low. Okay, as far as resistance is concerned, you can go ahead and tack this on as resistance on the interim. Okay, focus remains lower below 1813, bearish invalidation 1929.96. Questions on peso? All right. Any other questions before we close out the room for the week? A quick reminder, Jamie will be up at 12 p.m. with the midweek strategy webinar as usual. And a quick also guideline, I will be out next Tuesday. Hopefully we finally get this steel pin pulled out of my leg. And we'll be back on Wednesday, Thursday here for the intraday webinars. No change to the midweek strategy webinar next week. As always, guys, keep in mind that you can find the webinar schedule right on the homepage of SB Trade Desk. Just click on that homepage and we'll always have this updated for you weekly with the webinar schedule. Keep in mind some of that event risk that's on tap tomorrow for the US dollar crosses doesn't close out the week until we get that last and final print. Karthik says, I'm still very new to SB. Your insight analysis are superb and I'm loving it. Just wanted to let you know. By the way, Karthik, I always appreciate the comments, my friends. Are there roundtables on Daily FX every week? Pooja, they're doing them bi-weekly, I think. So I don't think we're doing one this week, but they should be on the webinar calendar updated on that site if they do them, if they're going to be that week. But I think it's bi-weekly that we're doing them. All right, guys. Best of luck trading for the rest of the week, and have a great weekend. See you all on Monday. Cheers.